offered by various companies, entities, and/or organizations that may not be directly owned, managed, or controlled by the Real Estate Life. All credit decisions, including loan approval rate and APR, will vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and/or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Good morning and welcome to Your Real Estate Life. Let's finish strong. Rates, wealth, equity, and New Year's strategy. I'm Michael Harris, mortgage loan originator 233410 with United Mortgage Corporation of America, NMLS 3189. We're here to talk about your money, your mortgage, your real estate decisions as we close out 2025 and prepare for a stronger financial position in the year ahead. You know, as we start the holiday season, Hanukkah starting here on Sunday evening. You know, family schedules are about to change, kids at home during the holidays. You know, your schedule may change as well. Thank you for joining us and taking the time to listen here on Fox Sports Ventura, 1590 AM, 97.9 FM here on KBTA on Saturday mornings here at 9 a.m. and our audience on K-Earth 101 Sunday mornings at 7 a.m. You can visit our website at unitedforloans.com. That's unitedforloans.com. We offer loans. We're just not for the interest that you pay. Now, you can also visit our show site, Your Real Estate Life, and write down our number. You're going to need it. 888-543-3980. That's 888-543-3980. Let's get started. You know, for the sixth time in the past year or so, we've seen the Federal Reserve lower their benchmark interest rate. Now, that's the overnight lending rate. We'll go into that a little bit more detail later. But even though the mortgage rates have trended downward over the past few months, they've really not moved that much down as comparison to what the Fed funds rate has done. And that is correct because the Fed funds rate is the consumer. It's the consumer side of it. It's the overnight lending rate that the banks pay. And then thus they change the prime rate. And we've seen the prime rate now go down to 6.75%. Now that's been going down. All of our listeners and clients who have gotten home equity lines of credit have seen a quarter lower, another quarter lower. They've been seeing these quarter lowers to their interest rate on their equity line of credit. Now on the program today, we'll talk about interest rate versus interest volume. We talk about simple interest is much lower than amortized interest. And the number is a number. It's the way the loan is being paid back that makes the difference. Now, why is it that we haven't seen that movement? Because as I said, it's the discount rate. It's the very short-term rate, literally the overnight cost of funds. Long-term rates such as mortgages and bonds, they'll react more to inflation. They'll act to those items. When we look at the Fed, they're looking at inflation, they're looking at jobs, they're looking at all these items. And we got the jobs number finally coming out for November later this upcoming week. My gosh, we were waiting for that for what, a month and a half? So we got that coming out. We'll talk about that too. But, in the statement, we saw Chairman Powell, he talked about the labor markets. He's talked about inflation. It's not quite where he wants it. But on the bright side, the Fed, they're going to continue to purchase bonds in the short term. They're $40 billion in T-bills. That just started, yesterday on Friday. So the T-bills are getting bought. Now it's kind of like it's a QE light. It's not really a large scenario, but it's starting in that area, getting more liquidity in the market. But again, it's not necessarily looking at long-term benefits to the mortgage market. Now we look at what's going on in the mortgage market. We look at when the Fed's going to move next. Now the next meeting is going to be in January, near the end of January. And all of a sudden we're at 20 some odd percent. So it's not a high probability of the next Fed move. Thus, mortgage rates are not pricing that in. So as we watch these items carefully, we'll see as rates can get potentially better. But right now we're selling off slightly. We're seeing interest rates rising slightly on the mortgage side from where we've been. A lot of it's evident when you look at the 10-year Treasury. The 10-year Treasury, we've been watching that. We were kind of heading that 4%. We were going to go, hey, we're going to get below 4. And then all of a sudden it's gone back in the teens. So we've been watching it move and meander around. So we're watching that. And of course, we've had a lot of our clients and past clients and potential new clients. Oh, I heard rates went down. Well, they've been going down, but today they're not quite going down further. So we're watching it carefully. We're giving some price breaks when we can, and we're trying to get the best of what we can do. We have some that want to buy down the rate. I'm not a big advocate of buying it down tremendously unless you have participation from the seller. So we want to take a look at that carefully to make sure your money is spent wisely. Now, Chairman Powell made it very clear the single quarter basis point move won't unlock affordability and suddenly jolt the housing market. And that's because, there's a lot more constraints that are going on. A lot of people are still, as you may be one of them, holding on to your 2, 3, or 4% mortgage because it's affordable. It's a monthly payment that's affordable. So when you're looking at the affordability factor, hanging on to that loan, maybe it is that equity line you need to look into. Utilizing that equity, paying off more expensive debt. We'll talk about all of those things today. We're going to go over the calendar. We're going to have Marisha Charbonnet join us in segment 3. We got so much to talk about as we wrap up the year. We're going to look at that lock-in effect I just talked about. We're going to look about the deficit of supply. We're going to look at all of these items and how it influences decisions that you make during this holiday season. Thank you for joining us. We'll be back with an exciting 3 more segments on Mike Harris. More after the break.
Your equity position is starting to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome to Your Real Estate Life. Welcome back. I'm your trusted guide in real estate and mortgage planning. I like to really center around that a little bit. I want to take my years of experience, the 38 years I've had, and try to give that insight back to you. Many of you have not done a lot of real estate transactions, but some of you have. There's been a lot of changes over the years of the 38 years I've been doing it. And I have to be kind of nimble and quick and kind of make the changes as necessary and make sure the right loan structure is there and also the right parameters based on your situation, whether you're self-employed or salaried, whether you have possible assets and asset depletion. Maybe you're looking at scenarios where you're doing an investment property. It's a debt service coverage ratio loan, DSCR loan. There's so many different types of products, reverse mortgages. So we want to make sure the right loan is matched up for you. Now, I'm a mortgage loan originator, 233410. I'm with United Mortgage Corporation of America, NMLS 3189. Give us a call, 888-543-3980. That's 888-543-3980. In the last segment, we were talking about the discount rate, how it was changed by the Fed, and everyone thinks, oh my gosh, the discount rate went down. Mortgage rates have fallen. Well, rates have fallen prior to the discount rate going down. It's usually a precursor, not an after effect. The bond market's already looking at the next 6 weeks. What's going to happen? What economic news is coming out? That's very, very important. So not that we're tone deaf, but we're looking at what's going on in the future. Now, rates could gradually come down as we head to that next meeting, but right now chances are still in the 20 some odd percent area. So, some confidence is warming up. There's a possibility of another move or so during the calendar year next year. We'll see as perhaps our Fed governor or Fed chair is going to be replaced in May. So we'll see what the tone of the overall board will be. So, I've said it many times. I mean, be careful what you wish for or ask for. You might get it, and it may not be the answer you want. Sometimes the pressure of non-move will cause the bond market to behave to want the move and price it in coming sooner and see mortgage rates get better. Now, in the contrast to that, you got others who, of course, want to see their equity line go down. They want to see consumer rates go down, but then the savings individuals also see their savings and money market accounts don't earn as much of a yield. So there's a lot of push and pull to the process, and we got to make sure where you are in your timing when it comes to those decisions. Now, we had the Fed, or actually not the Fed, but the government had the shutdown. So with that said, for a good month or almost month and a half, we didn't have any economic news on many sectors. And of course, the Fed was kind of operating blind. I kind of said that on previous programs. It's like when you go through the fog, what do? Well, some people say you go faster, right? No, I don't think so. I think you slow down because you can't see as well. So of course, things slowed down. So we had a lot of push and pull again. So as we go through this calendar period, we're going to see some economic news that we need not have in October and November. So whether we put a lot of weight on it or not, I'm not too sure. Or maybe it's just a reassurance, perhaps, of the Fed move. And maybe it helps us to price in the next move. So this week is key. So on Monday, we have the Empire State Manufacturing Index, the reading on economic activity, the NAHB, a home builder sentiment, important to understanding of builder confidence and future supply. Kind of builder sentiment falls, future construction slows, deepening the supply problem. So we're kind of looking at what's going on there with inventory. On Tuesday, we have housing starts and building permits, perhaps the most important housing data of the month. We have starts, what's being built, and permits, what's being planned. So we'll see how that's going on for 2026 coming up. We have industrial production, shows broader economic strength. But on Tuesday, we finally get those November employment reports. Normally they come out on a Friday, the first Friday of a month. So, month and a half later. So this is going to show the full picture of the jobs, the payroll growth, the unemployment rate, the wage trends, the stuff that was in between that we have not seen, and why it matters. Kind of fills the gap. Kind of fills the gap to our next reports that we'll have, and we can kind of see where it was and kind of see if we made the right decisions or non-decisions during that time. On Wednesday, we have the mortgage-backed MBA mortgage applications. We're going to see what's going on with refinancing and applications with the Fed recent rate cut. We're going to see existing home sales reflects how locked in homeowners remain and how inventory is moving or not moving. We're going to look on Thursday to initial jobless claims as always. We have also the Philadelphia Fed Manufacturing Index for regional activity and consumer confidence heading into late December. Confidence is the key for both real estate and retail. We're also then going to catch up a little bit. We'll have consumer price index coming out for November. So we're going to kind of fill in the blanks there, find out what's going on, whether inflation is continuing, cooling, or holding firm. The Federal Reserve has tied its future rate decisions directly to inflation progress. So the print really does matter. We'll be looking at core inflation. That's services without food and energy, shelter costs, still responsible for a large share of overall inflation. Month over month changes, markets react instantly to that. So we'll see what happens. Real earnings and released alongside the consumer price index show whether wage growth is keeping up with inflation. When real earnings fall, consumers slow spending. and that feeds directly into economic momentum and rate direction. A lot of words, a lot of items, a lot of things I'm watching, and we're making sure we're taking advantage of the best way we can save money for our clients. I spend your money the way I spend mine, sparingly. I want value for my money, and so should you. On Friday, we had the PCE inflation preview indicators coming out, the Fed's preferred inflation gauge. We're going to see those pre-releases and see the direction. A lot of this week is really aiming at what we're going to do maybe in January. So we're going to see what the Fed's reaction is and some of the pre-speakings to the next meeting before their quiet periods. And we're going to see how that fares. We're also getting consumer expenditures update. This is not a monthly inflation report, but it does help the Fed understand where households are spending and saving and feeling pressure. Now, in a year that higher borrowing costs, insights, and household budgets matter, the influence long-term expectations and growth, inflation, and interest policy is very, very important. I mean, really the theme of this week, it's about inflation, jobs, housing supply, and interest rate trajectory. And I'm watching that carefully. With that said, I'm taking action with our clients and you, our listeners. If you have equity in your home, I'd like to talk to you about a home equity line of credit, not trying to put you in debt. This is a loan, a line of credit that you can gain to have access when needed. Not to take it, but when needed. And a lot of people have the need because you're paying over 20%, 30% on credit cards and other items. And they're set up not in the best way. And if you can use a home equity line of credit to avoid interest volume and save money, that makes a big difference. So we've been setting these up with little to no cost, getting a line of credit conservatively, 25, 50, 100, 200,000 line of credit, depending upon your equity position, and setting that up for you and having it there, because when you need it, you can't get it because you may not qualify. So gaining it when you don't need it is usually the best medicine to take. Now, some of you are self-employed out there. Maybe you don't show the income on the bottom line. We do have what is called non-qualified home equity lines of credit, non-qualified, non-QM. So whether it's bank statements, cash flow, we can look at those opportunities as well. And we've had many individuals utilize that for businesses as lines of credit, operating business expense, and we can talk more about that. But a home equity line of credit, it is a second mortgage, but it's not something you should fear. You should embrace it because it's going to allow you to save major money and also be there in case of emergency. I don't wish that emergency on you, but it's nice to have and have peace of mind and sleep better at night. We've had individuals utilize that line of credit, paying off early interest volume on their amortized loan. I mean, I dare you, take a look at your mortgage statement, pull it out. Not right now, you're driving. But when you have a chance, go online or take a look at it. Let me know. Statement at unitedforloans.com. You can send me the statement, but send me an email. You can let me know what percentage of your mortgage payment is going towards interest and how much is going towards principal. Now, unless you're 18 to 22 years in, it's not even 50-50, unless you've been paying extra. But when you pay extra, how much is too much? How much is not enough? And are you consistent? That's what we'll talk about later in the program. We'll talk about the Money Max program. We're showing individuals and families how they can actually lower all of their debt, pay off their debt in as little as 5 to 7 years, well, maybe a third to half the time. And we've been seeing those results consistently without changing their lifestyle and not even needing a refinance. And I've been talking about a home equity line of credit. It's not even needed. It works with checking and savings. We have a webinar that we do on Tuesday evenings at 5 p.m. 5 p.m. Tuesday night. I'd like to get you access. Send me an email, interest@aheadformoney.com, aheadformoney.com. When you send that email, I want to send you a few links to watch so you understand the concepts a little bit better. Nothing too hard, nothing too complicated. It's not going to give you that aneurysm. It's very easy to understand in that respect. But I want you to take a look at that maybe prior to coming on Tuesday night. And then let's set up a time to get together and talk about your individual circumstances, because everyone's different. But let's talk about it. Interest at aheadformoney.com. And I repeat, an equity line of credit is not needed. Insurance is not needed. You don't need an insurance policy. You don't need those items. The checking and savings, it works beautifully. I want to show you how that works for you and your family. Interest volume, the actual dollars you pay in interest. When you closed on your home loan, you had a closing statement. On the bottom of the closing statement, there was a TIP, TIP, total interest percentage. And it's that number you like to try to ignore. And if the rate was over 5.2% on your home loan, it was over 100%. Because you didn't only borrow $400,000, now you're paying back $800,000 plus. So you're giving that over 100% tip. Now, I don't know about you. When I go out to dinner with the family or go somewhere and leave a tip, I'm not leaving over 100%. I mean, it's rare that I'm going to leave over 30, 40%, right? So to gain that lower number, even if you're at 2 or 3%, at 3%, you started at 58%. When you looked at your first mortgage statement, you looked how much payment was going towards principal and how much went towards interest. You think that's right? You think that's fair? Not as much. So your 2.5% loan with 25 years remaining that you're protecting might actually be saving money getting an equity line of credit that's in the 7s and actually knocking off 6 months at a time off your interest volume that you owe on your first mortgage. Set it and repeat, rinse and repeat. There's a method to getting the job done. You were not shown, you were not taught. I want to help show you that process. And it's not something you can really master on your own. That's why you need the Money Max account. Personally, I had 26.4 years on my mortgage. I was pretty smart at what I do. I understand these concepts. So trying to do it on my own, I was taking it down to 12.3 years. Pretty darn good. I was impressed until I put my numbers in the program a few years back, and it took me down to 7.9 years. I guess I was missing 4.4 years, which was over $100,000 of extra money I wasn't saving. I don't know about you. I'll take 20 grand today. I'll take 50 grand, let alone 100 grand. I think you settle for anything. If I can save you hundreds of dollars, thousands of dollars, it makes a big difference. 888-543-3980. That's 888-543-3980. We've been showing individuals and couples how they can also utilize the equity in their home based on age, 55 and over, 60 in some states, 62 on other programs, utilizing a reverse mortgage. A reverse mortgage allows you to have an optional mortgage payment. If you took that optional payment and you were able to pay down other debt, other more expensive items, and then attack maybe the equity if that's your choice, but you're using the money more responsibly to focus it in the right spot, but have a perfect financial GPS letting you know when, why, when, and how, and all those fun things. Just like when you drive in the car and you put this direction in and it tells you how to get somewhere and you want to argue with it, right? And you think you know better until you hit the traffic jam that it knew better. But when you make the wrong turn, it recalculates and gets you back on track. Why not do that with your finances? Why not make perfect decisions? Why not get perfect information? And then have something smarter in the room than both you, me, and many others combined that doesn't talk back to you. Real advantageous. Kind of bring it down to the basics. When's the last time you reached in your glove compartment and pulled out a roadmap? Many years ago. Some of you don't even remember that. What am I talking about? If you were driving down a 2-lane highway, 50 miles, and you're on mile 46 and all of a sudden the bridge is out. Now, mind you, you had all these people driving the other way waving at you and you thought everyone was just a friendly face, right? until you found out why they were waving. So now you have to make a U-turn and start over. Took you about 4 miles before you forgave yourself, and then now you're waving at everyone too. But look at all the time it took to not get the proper information. We're in an information age. It's out there. It's available. It's up to you to take it. You can live the way you are, but I don't want you working extra hours, extra jobs, and working yourself to the bone. Take that time to spend valuably where you want to be. If you want to work harder, that's up to you. But let's keep more money on your side of the ledger. Let's talk. 888-543-3980. That's 888-543-3980. Go to yourrealestatelife.com or unitedforloans.com to get started. Now, I know it's December. Maybe you're not looking to purchase. Maybe you are. Love to get you pre-approved. Maybe you're not thinking about refinancing. Well, let's take a look. Have you done a loan in the last year or two? Maybe your rate's too high. Maybe you have credit card debt. Maybe you have other obligations that are actually dwarfing the loan that you may be protecting. Maybe it's redoing that debt into a better line of credit or a better method to get it paid off. Let's talk about these options. You may have a little bit of time during the holidays here. I'm available for you. Give us a call, 888-543-3980. That's 888-543-3980. We're in the middle of December. You got a little time. We're not going to make the end of the month the close. No, we're not. But we're going to get you approved before the end of the month. I'll tell you that. We're going to gather, look, gain documentation, be in a ready position to save you money. If you're renting right now and you're thinking about what are you going to do next year, maybe it's getting pre-approved to find out what you do on a purchase. If you're a first-time home buyer, there's possible grants and other programs that may be available. We can discuss those. But if you're paying rent, your landlord loves you. You don't need that kind of love in your life. You need to make it stop. Let's work on that together right now. 888-543-3980. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. We'll be back right after this break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-5433-980.
Yes, it's a little scary right now, but every crisis presents an opportunity. How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on KR3 host to the CEO, Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit unitedforloans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed from one direction to another. How can you make it all stop? United Mortgage Corporation of America, unitedforloans.com can be your guide. Call directly at 888-5433-980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-5433-980 or visit at unitedforloans.com. That's 888-5433-980.
So this is Christmas, and what have you done?
I'm Michael Harris. Welcome back to Your Real Estate Life, your trusted guide in real estate and mortgage planning. You know, been doing this a long time, 38 years, been 19 and a half years here on the radio. You know, I'd like to say that I've seen almost everything, but you know, just when I say that, something else comes up. You know, been doing it quite a bit of time. Give us a call, 888-543-3980. That's 888-543-3980. Visit us at yourrealestatelife.com or get started at unitedforloans.com. We are also now on YouTube at Your Real Estate Life. So take a look there. I want you to subscribe and follow us there and let me know what you think. I'd love to hear that as we get started on our journey or continue our journey, finishing strong with rates, wealth, equity, and next year's strategy. But it's time for our estate planning spotlight. Joining us today, we have Marisha Charbonnet with Family Security Law Group, a trusted advisor in real estate planning. all across Southern California. Marisha, welcome back. And what do you have for us today during this holiday season?
Good morning, Mike, and happy holidays. It's always a pleasure being on your program. I'm sure many of your listeners, like myself, have been running around these past few days in search of the perfect presents for the people we cherish. While perhaps not the most obvious choice this holiday season, there is a gift you can give that will last long after the lights come down. It's the gift of peace of mind and security for the ones you love most. When you gather with family this year, I encourage you to think about what truly matters. As an estate planning lawyer, my work with families who are generally gathering together at a less joyful time in life has revealed time and again that the gifts which don't come wrapped in paper are often the most meaningful. Providing lasting protection for your family's future through estate planning is a gift that preserves more than just property and money. It can preserve harmony, values, and quite frankly, the family relationships that you spent your life trying to cultivate and nurture. It's important to remember that estate planning isn't just about assets. It's about securing the well-being of the people you love most. A will, trust, and the right legal documents can ensure that your wishes are known and your family is protected, no matter what the future holds. Imagine having the peace of mind that comes with knowing that your assets will be passed on smoothly, your healthcare decisions are in place, and your family will avoid the costly delays and confusion of probate. Whether you have few assets or a growing estate, making sure that your wishes are legally documented is a priceless gift that brings comfort and security to the people you care about. While those setting up a will or trust never get to see the gratitude for that gift in the same way they experience gratitude from those unwrapping presents under the tree. One of the joys of my job is having the privilege of witnessing the thankfulness of children and loved ones whose parents and family members planned ahead. I can attest that their appreciation is deeply heartfelt and that they derive immense comfort at a time of loss from knowing that the planning was done out of love for them and to make their lives easier. So for anyone with questions about wills or trusts or estate planning in general, I can be reached at 805-496-4681 or at familysecurity.lawgroup.com. I hope everyone has a very happy holiday.
Thank you, Marisha. Wishing you and yours a very, very happy holiday. Important information as always. To learn more about protecting your family legacy, visit familysecurity.lawgroup.com. You know, we always think about things when we need them. It's not being extra careful about having them there when we don't. And I talked about that earlier with the home equity line of credit and some other ways that we can save you money, but also ways that we can protect you against the unexpected. And Marisha deals with that on a regular basis. It's future planning because you care about somebody, yourself and others. And it's making those decisions now when they're maybe a little bit easier or being forced upon others that wasn't really your true intent. And we see that a lot. We see that in the public sector when celebrities and others perhaps have an unfortunate occurrence and we find out whether they were set up properly or not and all the arguments that may occur where ours may not be as public, they're actually real. And we want to make sure your wishes are really correctly spoken for and your family's protected. I've seen so many families really have a problem just because taxes, estate issues, or different things that were done that were thought to be done right because they got done, but they weren't done correctly, costing hundreds of thousands of dollars in fees or losses. So I want to make sure you get that right. Bill of health, give Marisha a call. We talked earlier about the Money Max account, and I wanted to talk a little bit about strategy. Not so much as about loans and products. I talked about home equity lines of credit. I talked about reverse mortgages, whether it's a first position or even a second position now on a reverse mortgage, where we can access funds and have limited or no payments required. But the Money Max account, it helps you to eliminate debt, manage cash flow, and reach your financial goals. It allows you to approach things a little bit differently on your existing cash flow. It utilizes it a little bit smarter. It looks at your discretionary monthly monies, the monies you have left over, $1, $10, $100, $200, $1,000, whatever that is at the end of every month. But it's looking at things just a little bit differently. It's looking at the date, the statement date, the date the payments are due. It is looking at interest rates to some degree, but it's a question of how they're being paid back. So that's really important. It's your financial GPS. It takes a look at all the outside influences and comes up with the best way to get from point A to point B. And in most cases, it's debt-free. Now, we have a large segment that doesn't necessarily look at being debt-free. They want to leverage. They want to leverage money to create more assets, to create more income. They're in a building stage. So we can operate in that stage as well. We have individuals who have multiple properties. We have one individual who has over 100 properties, utilizing this to accumulate more rental, more doors, more income. So it could be utilized in many different facets. And where you are is where I want to find out. I want to know your why. I want to understand if you're looking to grow, looking to eliminate debt. Where are you in your life as far as your family? Are you looking to gain money for retirement? Are you gaining money for college? What is it that you're looking to achieve and do? One size does not fit all. I want to sit down and map with you your plan, but I want you to understand the concepts. Now, you can schedule a meeting with me directly and we can talk, or you can start by going on Tuesday evening at 5 p.m. to a webinar. I can send you out information to access. If you can't go, that's fine. I'll get you info so you can find out more. We can set up a time and we'll go over that together. When we come back after the break, we'll continue our talk, a little bit of how it works. We'll summarize the program and we'll come back right after this.
Approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
I'm Mike Harris. Welcome back to Your Real Estate Life. It's your day in real estate radio. Childhood memories there, isn't it, people? Childhood memories. Been in the industry now 38 years, seen an awful lot. And as I said in the last segment, been on radio 19 and a half years. I want to help you and help guide you through some tough decisions, whether it's the right loan or the lending decisions, getting you pre-approved. Of course, that's what I do, a mortgage banker. But we also talk about paying off debt responsibly. And we talked about that here on our last segment. It's really putting together your financial roadmap. It's utilizing a perfect financial GPS to do so. It's not only taking that 15-year loan or 30-year loan, or they're talking 50-year loans now. It's a question of what you can afford to do and where your money is going and what you can do to better direct it rather than throw it somewhere else. Because in early years of amortized loans, you pay a lot of early interest. The goal is to help you move further down that cycle. So we want to look at some advanced strategies. We want to tailor options directly for you. We want to pay off debt, but we want to do it in the right way. Why pay all this and pay a little here? Well, why not this? Why not that? If you have 6 different choices, there's 720 factorial math combinations. Holy cow, you get it right one month, good luck next month. So we look at this program just the way when you drive in your car and the GPS tells you the destination, how to get there, and the fastest route. That's what the Money Max program is going to do with your numbers and your finances. There's no guessing. There's no hoping. Oh, I think it will work. No, it's just clear step-by-step financial direction. Now, no one's touching your money. No one's accessing your accounts. No one's gaining your account numbers. No one even knows your name because you don't have to put your name on your own account that you're operating and getting the advice from. We're looking at maximizing discretionary monies. We're looking at interest costs versus timing, but it's doing it without you guessing, and it's getting it perfect every single day. Regardless, it's getting it right, and it's giving you the right information. Homeowners preparing to refinance can find out what this can do for you. Maybe homeowners who are looking to purchase, add more property. It could do future analysis. We could look at monthly debts. If you have many different debts, there's many variables, and it operates even more efficiently than you can ever imagine. Self-employed borrowers, it works. You don't have to have an equity line. You don't have to have life insurance. This works with checking and savings. I've seen tremendous results. 63-year-olds debt-free at age 70 rather than age 90. I've seen young families be in a perfect position. It isn't theory, it's math. You may not like math. You don't need to like math. The math will be done for you and with you, and it'll give you the guidance you need. Now, I may like numbers. You may not, but I do. I put them in the middle of my desk. You may not, but it's not important because the program will do that for you. Whether it's a mortgage, a car payment, credit cards, personal loans, it's going to get the job done. Join me on Tuesday night, 5 p.m. Send me an email, write it down. interest@aheadformoney.com. It's very common. 5 to 7 years, maybe 10 years, third or half the time, we are seeing results. Now, on today's program, we talked about finishing strong, rates, wealth, equity, next year's strategy. Part of that strategy is the Money Max account. We saw a rate cut that occurred earlier in the week. We saw 0.25%. Now, that is, again, on the discount rate. It doesn't mean it goes right to the mortgage rate, but it did go to the prime. We saw the prime rate go down another 0.25%. So that means the people who have home equity lines of credit are saving money. Less interest is being paid, which is even more important when we're trying to knock out that interest volume on a first mortgage. Find out more about that. Let's talk about that concept individually so I can illustrate your own mortgage and how it can work. 888-543-3980. That's 888-543-3980. Now, we saw one Fed member wanting a half a cut. We saw two wanting none, and then we have the rest going a quarter. We have a Fed that's going to be seeing a face of change in May when we get a new Fed chair. So that's going to change things. But our next move looking, or hopefully, if you're rooting for the mortgage side, may be in January. We're still in the 20 some odd % camp, but we have a lot of economic news coming out and a lot of past news that we have not seen that's coming out starting on Tuesday with the employment report from November. So we're going to keep our eyes open. I know it's the holidays, but we're going to really be focusing on this to see the direction of where we are heading for 2026. Now, behind the scenes, as I said, we had a little bit of dissension back and forth between the members, but the bottom line is they made the cut. They're also now buying some T-bills and they're subsidizing, but the average 30-year fixed rate was 6.22%. Now, I've seen some of our closes now with a 5 number, but it depends on what you're doing. Are you paying any points, fees, or costs? Are you prepaying fees to buy down the rate? So that really depends, and your cost depends upon your credit score, your equity position, how much you're putting down or how much value the home is to what you currently owe. So we're watching those very carefully. Now, these 10-year treasury yields that are very common to watch, you can see them probably on your cell phone as well. But we're in the 14s again, and we were in the 4.0s. So we've gone backwards slightly. So we're not necessarily seeing major improvement right now until we get some of this new data and information to find out if the chances of the January moves start rising. If they start to rise, we will see the bonds rally, mortgage rates get a little bit better, and rates are usually best a week or two prior to a Fed move. Prior to a Fed move. So as we head into January, we're going to keep an eye on it. We're going to see where things are heading. So we're going to watch that carefully. But what I'd like you to do, as you gather your tax items, maybe by the end of the year here, you start thinking about it maybe, keep your mortgage statement for the end of the year. I want you to keep your last pay stub, which breaks down overtime bonus. So keep that in mind as you wait to your W-2, which doesn't break that down. Make sure if you had any property acquisitions or closes, you have your closing statements, whether you purchased or sold. Keep that in mind. But let's review where you are on your interest volume. If you like, take that mortgage statement. You could fax it to me or email it. Email it to me at statement@unitedforloans.com or pick up the phone, 888-543-3980. We could discuss it. But if you have the availability to come on a Tuesday evening at 5 p.m., I'd love to see you there. I'd like to have you understand a little bit more about the Money Max account and how much money it perhaps could be saving you and your family. We could then have an individual meeting, whether it's after the holidays, that's fine, or during, I'm fine. But I want to make sure you have all the information you need so you can save money. 888-543-3980. That's 888-543-3980. Now, we've had a lot of people save a lot of money this calendar year. I want more to save it in 2026. I'm talking now to some professionals out there, other mortgage lenders. Have you talked to your clients about saving interest volume? Insurance agents, CPAs, financial planners, divorce professionals, realtors. I want to talk to you about having you get to your database and having them save money. Give them the best gift of all, their money back in their wallet. Rather than leaking it out to someone else, let's get it back to them. Let me show you how you can make a difference in their real estate life, in their finances. We've been able to free up money, allowing people to provide for their retirement, provide security for their family by freeing up additional discretionary monies. A lot of our jobs as professionals is doing that. I want to give you another item to use. Give me a call, 888-543-3980. Love to have you join us on Tuesday evening. There's also a professional meeting that I can also invite you on Thursday evening. Love to get you there. Love to talk to you more about it, and we can chat and see if it's right for you and the people that you care about. I want you to stay informed. I want you to stay strategic. I want you to make every financial decision move you closer to the life that you want to build. You know, we talk about your real estate life. It's the title of our program, but it's your finance life. It's your personal finances. Every decision is important. And as we close another calendar year and start 2026, it's vital. As we look at interest rates, maybe kind of going sideways, home value is not going up a lot, inflation's still there. We look at homeowners insurance and renewal costs going higher. So many things are influencing decisions that we want or don't want to make. Let's make the right ones and let's do them together. Hopefully you enjoyed today's program. I'm Mike Harris, President and CEO of United Mortgage Corporation of America, unitedforloans.com. We have this program each and every week. And when we have this program, we talk about things that maybe sometimes you don't want to talk about. You don't want to talk about estate planning. You don't want to talk about values. You don't want to talk about inflation. You don't want to talk about economic news. You just want it to all go away. I get it. But you don't want to necessarily put your head in the sand. You want to make sure you're aware so you can make the right decisions. And we talked about the Money Max program. It's going to give you those items that you can ignore, but you're going to have the information. And it's not going to be a lack of knowledge. We're going to help you get the education and information you need to allow you to make the right decisions for you and your family. I've seen so many families over the short amount of years that I've been utilizing the Money Max program. I've had a couple become debt free. They only had a short time to do so, but prior to that, they thought it was helpless. Whether you're getting started, accumulating assets, or you're on the other side where you're trying to now eliminate debt, the program really can make a big difference. There's a lot of outside influences that occur in the world today. Let's take care of yours at home. Let's make sure you're aware of what happens day to day, and you can make the decisions that you need to make, sometimes tough ones, but sometimes they can be a lot easier than they are right now. 888-543-3980. That's 888-543-3980. You know, I was looking at some of the news that was coming up, and I saw the 10-year Treasury this week. It increased by 5 basis points. And that's kind of what I mentioned. We went down and we went up. So kind of inverse. The day that the Fed went down, I had a couple of calls, some professional calls, and they were calling saying, oh, I heard rates went down. Are we back in the threes? No, we're not. I don't see us getting there unless something major or something tragic occurs. But right now, I'm aiming to the low sixes to the high fives. And if we can gain those directions, we'll be doing very, very well. We saw the Dow this week. It was up 503 points. A lot was the latter part of the week here. And NASDAQ was down 383, also losing here at the end of the week. The S&P was up 57. Gold was up 8. And the dollar was sliding. We see crude oil continue to decline. That's what's keeping interest rates low as well. So as long as oil stays down, that's actually a positive. It was down 257 on the week. So I really watch these items and how it affects things. And as said, on Monday, we have December Empire State Manufacturing Index. Key news next week is Tuesdays. We have the jobs number, as I said, coming out from November. So we're watching that. We're going to be watching housing starts and permits, industrial production, capacity utilization, private mortgage, PMI manufacturing. We're going to be looking at the MBA applications, retail sales, weekly jobless claims, CPI. Got so much coming out. University of Michigan's Consumer Sentiment Report, PCE inflation. We have a Treasury auction in the middle of the week as well. So it's a very busy week. And I thank you for joining us over this weekend because you got busy times going on as well. And I recognize that. And you took time to listen to us this morning. And if you have an opportunity, pick up the phone, give us a call, 888-543-3980. Let me know what's on your mind. I want to know whether you have a good mortgage, whether you want it to be better, whether you have debt, you have other items that you want to take care of, you have equity. Is there a better thing that you can do to eliminate debt faster? Let's get behind these answers. Let's get you on the right path. Or, hey, you're doing a great job. Bravo. Let's get those answers. Whether you're sitting here in Ventura, California, or you're sitting there in towards San Clemente, you're inland, or you're on the coast. I want to talk to you. If you're a professional, I want to hear from you. What's going on in your market? You tell me. Is inventory up? Is it down? Are you seeing activity or not? Let's see what we can do to help your database save money through the Money Max program. There's so many directions that we can head, and it's up to you to take advantage of them. 888-543-3980. That's 888-543-3980. You can actually subscribe and get our newsletter. Go to our website at yourrealestatelife.com. Go to the bottom of the page. You can actually get information so you can get on board to our webinar on Tuesday night at 5 p.m. So there's so many ways to get involved. Write down our number, 888-543-3980. Make sure you also utilize or look at us on YouTube at Your Real Estate Life. I know you're listening to us on the radio. You don't go on YouTube, and you YouTubers are watching. You're not going on the radio. So there's a little cross-pollination maybe, but let's subscribe. Let's get that started. We're going to be getting a larger presence there and seeing what we can do. But I'm going to be here coming to you on the weekends, whether we're Saturday here on KVTA out here in Ventura on Fox Sports out here, or we're on K-Earth 101 on Sunday mornings at 7 a.m. We're here to bring you information, vital information, and it's vital because it's about you and your real estate life. Again, hopefully you enjoyed the program. It's been a pleasure to be here. As always, as I come out to the studio on the weekend, I'm always thinking, what am I going to do this weekend? You know, well, very similar, but things change each and every single day. And it changes because of you, our listener. I look forward to hearing from you. 888-543-3980. I'm Mike Harris, MLO 233410, United Mortgage Corporation of America, NMLS 3189. I want you to apply. Let's find out your options. Let's see what we can do. Go to yourrealestatelife.com or unitedforloans.com. Until next week, I want to talk to you and check out your deadlines. Plan your next move. And as always, what kind of loan do you have? Have a good weekend. I'll talk to you next time.
United Mortgage Corporation of America, unitedforloans.com, will continue to take your calls after the program. Call now to start your home loan process at 888-5433-980.
As I said, thank you for joining us this weekend. You know, it's a pleasure being here, and it's been here the years that I've been doing it now, 19 and a half years. It's been a pleasure helping a lot of families forge their future, a couple of in the fourth generation, many in the third, many in the second generation, and you, perhaps, the first generation. Give us a call, 888-543-3980. Enjoy the holiday season. We'll talk next week.